Before we start today's episode, I want to give a quick shout out to Zencaster, which is a podcaster's best friend. Trust me when I tell you this, Zencaster is like a Shopify for podcasters. It's all you need to get up and running as a podcaster. And the best thing about Zencaster is that you get so much stuff for free. If you're planning to check out the platform, then please show your support for the Founder Thesis podcast by using this link, zen.ai/founder thesis. That's zen.ai/founder thesis.
Hello, everyone. This is Shachindra Nath. I am the Executive Chairman and Managing Director of U GRO Capital. We are trying to build India's largest small business financing platform in India, and it's very good to be here.
एक मिनट रुक जाओ रेडी होने दो चलो ये कर लेते हैं दिस कुड बी अ ग्रेट इंट्रो
Small is big is probably the motto of Shachindra Nath, the founder of U GRO Capital. U GRO Capital is an NBFC or a non-banking financial company that is in the business of lending money to small businesses. And the business opportunity of lending to small businesses is massive. But at the same time, there is a reason why this is such an untapped market. It's not possible to serve this market using traditional methods. And in this episode, you will get to hear about some very unique innovations of U GRO Capital, because of which they are able to tap into this massive opportunity. Shachendra's own journey of building U GRO is no less fascinating. Unlike most founders who first have an idea, then build a prototype, and then raise funds, Shachendra started big by directly acquiring a publicly listed NBFC that he transformed into what is today U GRO. Listen on to Akshay Dutt talk to a path-breaking founder who created an institution that is built to last much beyond him.
So, actually, my first thought was to create, and because I had diverse financial services experience, my first thought was to create a fund. Because I have done so much of asset management, to create a financial services focused fund which has ability to fund other financial services professional to create multiple financial services business, right? Yeah. So
So,
fund which can do.
like this would be like a VC investing in fintechs. Like, is that
Yeah,
a
it
right
can
to
be,
say?
so that's, you can put it in any box, but it was basically a pool of capital vehicle. Actually, my idea of a financial services fund, which could do right from an early stage VC investment to a late stage growth capital in financial services, lending, fintech, asset management, insurance, everything put together. And actually, I tried. So I went to all my friends, people who knew me, and everyone said that you are not an investor. And I used to get very confused. What do you mean by you're not an investor? He said, look, and probably they were right. They said, look, first and foremost, Sachin, you are an active operator of a business. You, even if we give you capital and you become an investor, for you to give capital to somebody else and wait for him to succeed, you will become very restless because you will like to change things, correct things, and do on your own. So don't get into that trap. And second, the investor world, what is typically called the LPs, would not recognize you as an investor, because if I would have come out of a Blackstone or a Carlyle and would have done series of multiple investment and succeeded in that, I have a track record of investing. I had a limited track record of building businesses, and that's why most of my well-wishers said, and that was in first 6 months of 2016. They said, no, think of a business which you can own and operate rather than investing into others' businesses, because that's not your core capability. Actually, it took me little time to hear that feedback first, saying, look, you don't have capability to invest in our business, but then I realized that probably people are right. And then within the broader financial services, I had to choose where my heart, and where I thought that I can make a change. And that also again came from, I remember this in 2012, when my dad passed away. He went back to Banaras, when we took him to the Ghat. All of a sudden, there were almost 2,000 people who were waiting there for him to get cremated. And I realized that, we in private sector, we all do a lot of things. We might just earn a lot of money, but we don't get respect. So I said, if you look at the broader classification of financial services industry, investment banking, asset management, high yield lending, which is the mid corporate real estate, we are not doing good to society at all, right? Because there is nothing which you are doing which is creating a real impact. And that's where I felt that within if you look at each of the financial services pieces, Lending first, because as I said, there has to be an alignment with the provider of the capital and the people who build the business. Lending as a business broadly, wherein you can bring professional capital and you can create exit for them, because it's a capital business, it's a high churn business. Now within that, banking is not possible because banking has a very different regulatory construct, and that's why outside banking this NBFC becomes fairly attractive. Right? Now you call it fintech, you call it NBFC, you call it whatever it is. But within that, with my experience, I realized that you have three types of lending opportunities. But the highest and most meaningful impact in India can be created around small businesses. Because when it comes to consumer financing business, I'm anyway anti-consumer hypothesis itself. But anyway, there are large players like Bajaj and few others who have already succeeded in that. When
But
it comes
why you anti-consumer lending?
No, not consumer lending. I'm anti-consumerism per se, not the consumer
Ah,
lending. Yeah,
got it,
yeah,
got it, got
yeah,
it.
yeah. The anti-consumer. वो तो बहुत ही different angle है altogether. That's
Ha,
very
ha, ha, ha,
philosophical.
ha. Got it.
I'm not,
Yeah,
I'm
yeah, yeah.
not going to.
Take it.
So I think our country ethos doesn't, actually fit well with the consumerism, but we are all in that trap. I don't think so that we can do anything about it. Whether I like it or not like it, we are moving towards very high degree of consumerism. So that's okay. No, but between the what we call the wholesale credit and the consumer and small business financing, I realize that if I have to design and run or create in an institution and my name is recognized for that, there is nobody who has tried to create a very large format SME financing business. And I was very convinced that, if I bring professional capital, I would be able to create a scale size wherein these providers of my capital can take exit and new set of investor can all the time keep coming. So that's the core philosophy I started working on. And that's when that's the background of creation of UGRO. While it is a different thing, the way I wanted to create was all very, very difficult, but yeah, but that, and finally in 2017, I ended up raising straight 1,000 crore of capital, which in those times were very, very large actually.
Hmm. Did you raise the 1,000 crore on the back of an idea, or had you already launched
Never.
UGRO with
On
some
the, on
traction?
the, nothing on a piece of paper.
Wow. How did you
Yeah.
do that?
No, I had nothing. I used to call myself a Pukra promoter with only a PowerPoint presentation running around here and there trying to get capital. Yeah, actually, if you ask
This was
me,
like debt capital, right? Like
equity,
equity. Wow.
equity. I raise all of it. This is equity capital. If you ask me if I've ever tried doing it again, I would say no. So, so as I said, that look,
In your PPT, what was the pitch you were giving to investors? Like you will create an SME lending NBFC.
so yeah, my pitch was that okay. So if you come to that, my pitch was threefold. First and foremost was that the opportunity is very large. Second is that the the way the mainline lending institution, and some of this you will see get reflected from where I come from. My presentation always used to start that in India, if there is a dentist and there is an IVF clinic and both want loan, mainline lenders would only treat them as doctor, as one category, little realizing that a dentist may have 10 patients during the day, but an average earning from those 10 patients would be roughly around 20,000 rupees, right? 2,000 per. Versus an IVF clinic may have just one patient in the day, but that one patient is roughly around 7.5 lakh rupees. But a lender's credit officer, when we'll go for interviewing these two type of doctor, the first question he would ask, sir, how many OPD patient comes to your office every day or your clinic every day? And once the IVF clinic would say, sir, one, then he'll say, अरे ये कैसा डॉक्टर है भाई, इसके पास तो पेशेंट ही नहीं आते. So the way I used to say, this is a non-homogeneous sector versus lenders are homogeneous by nature. So unless you have a platform which has an ability to differentiate in this massive non-homogeneous and fragmented, customer set in a homogeneous way, you cannot succeed. So that was my first pitch point. Second pitch point was that size of the capital is important, because finally lending is a business where you have to give comfort to the lenders to us and to the customer. And that's why my second pitch was that I want to create a raise straight size of big size of capital, and I have no problem in getting diluted down. So, what does it mean that majority of the founders, and this is my advice to most of them, they are very bothered about what is my end ownership. And I used to think that, look, I have worked for 20. By the time I had worked for 25 years, and after 25 years, I had nothing in hand. Yeah, and if I go and work for another company at that age, what you get? You get some ESOP, you get some salary, nothing, right? So it doesn't matter that whether you are a 20% owner or a 50% owner or a 3% owner, because eventually your 2 to 3% is a relative term of what size of that percentage. In our kind of business, we because we are not capitalists, we can never own a business because our percentage ownership. We own our business because our capability and intent of creating scale and build an institution, right? uh, so second is that I gave this optionality to some of our private equity investors who came with me, saying that you don't have to invest at an expensive price. You come with me at par and be a large owner. I would, whether I'm a 3% or 10% or 5% owner, I would work same way, as if I'm a 100% capital owner. And third was that I wanted to create a structure or a vehicle which is being created for permanency. Lot many times, most of the new ventures are created with an objective to be sold to someone.
Mm.
Because
Mhm.
if you ask
Exit.
people,
Yeah.
yeah, what's your exit method? Somebody will come and buy us. I wanted to create an institution. So, and all of this became very difficult, component when I was raising capital. I said, I want to do it in a listed company format. So I actually virtually created India's first listed SPAC equivalent, wherein I said I will acquire a small shell, not shell, it's a very small listed NBFC and raise all my capital there from true blue-blooded traditional private equity funds, so that there is the entity and the investor's interests are two different things. I'm not designing this business to be sold to someone. Investors would get their exit from the market over a period of time, versus, the entity would be created to last beyond me. So it is not created that my son or daughters have to come and take it over. It is not created that I have to permanently run it. So I sometimes become immodest to say that, but think of this. My aspiration was to create a next HDFC equivalent, or a next, an institutional equivalent for SME financing. You are listed, you have a large capital, you are run and supervised by an independent board, and financial services professional who want to benefit from creation, they own, go get equity ownership through ESOP structure, and we'll build a scale, and it would change hands. So, when I'll retire in 5 7 years, it would, my next level of people would take it from forward from there. So all of this combination, so it's very difficult to put in few lines, right? But all of this was complex, but finally I was able to do it.
How many no's did you hear before hearing a yes? Like, how hard was that process of raising that round? Like,
121.
wow, 121 no's. Wow. And you actually like kept track. Huh? I mean, it's not like, if you said about 100, but you have that exact number in mind. Huh?
So day before yesterday, actually, I was telling somebody that prior to I starting this journey, I used to travel business. I used to stay in best of the hotels. I never had to bother about, what meeting, all of that. When I was on my own, I used to travel from Delhi to Bombay in train. I used to stay for 2.5 years in a hotel called Hilltop in Worli. Right. And I used to stay in that hotel purely because I didn't had money. That hotel, the room used to cost me 2,000 rupees per day, right? And prior to that, I used to stay in Four Seasons at Lower Parel. So when I used to go for pitch presentation and people used to ask me, where are you staying? I used to say, I'm just staying here in Worli, right? Or Parel. So people used to generally think, oh, this guy is staying in Four Seasons, right? I remember one day went for a pitch presentation to an investor whose office was in Four Seasons. So he said that, no, so his office was somewhere else, but he said, okay, after meeting, okay, let me drop you to Four Seasons. So I sat in his car, he dropped me to Four Seasons and walked from Four Seasons to, Hilltop, because I couldn't tell him that, look, I don't have that much of money that I can afford Four Seasons. So it's tough, but yeah.
Wow. And how many months did that last? That whole struggle to raise
I
funds?
would say struggle. It's very complex, but I was always very convinced that I will succeed. But as I said, I started this right in Jan of 2016, and my capital raise got announced on 31st December 2017. But finally, with all the approvals, because this was a very complex RBI approval and SEBI approval for open offer and all that happened in July 18. I first business which we did, first loan out was on January 19.
Oh, wow.
Yeah. And as
So,
you remember, to some extent, I was lucky because, got capitalized in July 19. ILFS happened in India in September 19. And immediately, obviously, the whole of the lending market in India went for a toss. But fortunately, we
you
had
had
power
money.
of power of the capital to build onto this business. And first year we ran between April 19 to March 19. We conserved our capital. We funded it by equity. Then 1 year of pandemic actually. But now we've done well. We have a 2,500 crore of asset book. We are doing almost 500 crore a month. We are considered to be the data tripod, or what we call the digitization of SME. We are at the forefront of that. Our data tripod based underwriting is accepted by almost every large lender. So State Bank of India, Central Bank, IDBI, Bank of Baroda are our co-lending partners. We are growing at a rate of 500 crore a month.
There are like a couple of things I wanted to understand in terms of the playbook that you implemented, which led you to where you are today. So you said that there was a problem of non-homogeneity, like the like a dentist and an IVF clinic are different, and which is something which traditional lenders don't understand. Which you was part of your pitch that you will solve it. So how
Look,
did you
all those
solve?
tradition, all lenders are lenders to us also. So I never use the term that they don't understand. I think so that because they're most of the bank's business is diversified by nature and they have too many other things to do. So sometimes there is a less focus to do it in this way, because for a large bank in India, if they have to grow their balance sheet in a years by 15,000 or 20,000 crore, SME is not the only way they can do it. No? So
Yeah, 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 yeah,
it's a
yeah.
matter of focus. Yeah.
But yeah, I wanted to understand how you solved that problem that customers are not homogeneous.
Yeah. So two things. One, in 2016 full year, actually we worked with Crisil, and we worked with them and to find the pockets of the sector and sub sector for which can give us the scale, but we are still deeply specialized. So we worked jointly. Actually, it's a work done by us, and then we looked at the entire 180 sectors under which small businesses in India operate. We filtered it down to 20, and then we filtered it down to 8. And we said UGRO would operate only in those 8 sectors. And last year we added micro enterprises as a sector itself. So we said that we will operate in education, healthcare, food processing, hospitality, light engineering, electrical equipment manufacturing, auto component, chemical, and electrical equipment manufacturing. And within these 8 sectors, we operate in 100 subsectors. So in healthcare, for example, we are not a lender to everyone. We are only, lender to small nursing home, dentists, IVF clinic, pharmacy, right? In education, we are only K-12 and play school. And so in hospitality, we are only to, fast food chain, restaurants, banquet hall. So this is the first, which we said we will define the, playground. But our playground is large, right? So we are not playing a basketball. We are playing game of cricket. We are in the field itself is large enough. So these sectors in subsector contribute 50% of outstanding credit in SME for in India. But more so, we said that these are the sectors which have 5 basic base characteristics. These are the sector where banks penetration is lower vis-a-vis other sectors, which means that we have a role to play. These are the sectors wherein you don't need massive geographical footprint. Otherwise, your cost or OPEX would become very high. So if you take
They're
agri,
concentrated in like tier one, tier two cities. So
tier one, tier two cities, yeah, yeah. So if you take an agri, which means that almost every village and corner
yeah,
you
yeah,
have to
yeah.
be physically present, right? Third, we said We don't want a sector wherein government policy decision can actually affect the business itself. So it's not a question of right wing, left wing, center, middle. These are the businesses which are driven by India's consumption economy. So
Yeah.
irrespective of any cycle of the market, these businesses would continue to grow. Yeah. So these are the core pillar on which we build. So that was the first thing. Second, in early 2016, we had this belief that if you walk in into a Chroma store today and you want to buy a fridge, you may have only a fridge may cost you 20,000 bucks. You may have only 5,000 or 3,000 rupees in your pocket, but you can still buy it, right? Because when you go to the counter, he's ask you this question: you want on credit or you want on cash? If you want on credit, give your mobile number on an app and you'll get an yes immediately. And in, I think so half an hour, you'll be able to, get that
Walk
fridge
out.
loaded to your workout, right? But when it comes to small business, generally everyone believes that I have to go and meet the customer, understand, look at his shop, look at his factory, and then I'll say yes and no. Our belief was that in early 2016 that is going to change in next year, 3 years, and actually that is happening now. So first is the focus on what we call our sector specialization, and second is the focus on data driven underwriting. Why this was happening? Because think of that 5 years back, I go to a small manufacturer and he says, sir, I want to give credit to you. Or he comes to us and say, I want a loan from you. For three questions you will ask: what is your revenue? What is your expense? How much of margin or money you make? Right? Because that is only decide whether you can take more loan or not, because your ability to pay back. Answer would be, my turnover or my revenue is not official. Come into my office, I'll show you that how I generate my revenue, right? Second, you say, sir, what is your actual expenses in the business? He'll say, look, my expenses are, because I don't want to pay tax to the government. And that's why a lot of my expenses are, other expenses which I put into the business. So please come and understand my real expense. So finally, lender would say, sir, your revenue is informal, your expense is more than formal. Sir, please give me a property. I can lend against that because I really don't understand your cash flow. Right. But so that's what we call India's journey from collateral to cash flow based underwriting. Today, what is happening? 90% of businesses, their revenue is formal because GST is a compulsory input for us. If you're not in you don't have GST, we don't lend to you. But we pull every time a customer comes, we pull his GST data, and GST data not only tells us about his turnover, but hundreds of more parameter around turnover, what we call the qualitative analysis. Who you sell, whether you do repeat sales, whether your counterparties are good, whether your counterparties are bad, what segment of the market is. So we call it 400 plus parameters around GST which you can analyze to profile a customer. Second comes the cash flow analysis. So it's no longer required to go and sit with the customer and have hours and hours of discussion to understand his cash flow. We use the tool of what we call digitized banking. You come to us, you give us your bank statement, we digitize that, and our system automatically filters out what is your actual expenses, what is expenses or income which are not related. And then our system also have the ability to corroborate the two data, your turnover data to your banking. Third is what we call the behavioral analysis. So a lot of people don't know that now in India we have 1.2 crore of data or bureau footprint of MSME itself, not the individual, but the business bureau trade record. Now that also one is a score and the predictable default analysis on that, but bureau also gives you much more deeper, insight. So we are not those kind of fintech which says that we have to go and look at your Facebook and your Instagram and that can tell you whether you are a good person or a bad customer, right? So that's not, but it's a real data. So when fetch somebody's business bureau record, it can tell us behavior analysis. So give you an example: if somebody bounces his check on a regular basis, behaviorally he's not a good customer because he doesn't keep cash in hand to pay his EMIs in time, right? So that's it's a red flag. So when you combine these three, what we call the data tripod, then you have ability. So today, out of our 450 plus crore of monthly underwriting or disbursement we don't ask any customer his balance sheet, his profit and loss statement, his income tax return. We only need these three things: GST, bureau, and banking. And then System says yes and no, and what level of loan the customer can afford. And then when it moves to our credit officer have an expert scorecard which is by subsector. So if he say it's a K-12 school customer, then the credit officer knows that he has to go and ask that सर आपके टीचर्स को आपने पिछले 6 महीने में कितने बार सैलरी टाइम पे नहीं पे की. बिकॉज अगर उसने सैलरी टाइम पे टीचर्स को नहीं पे की, दैट इज द मोस्ट प्राइमोस्ट एसेट फॉर a K-12 स्कूल. देयर इज समथिंग रॉन्ग एंड देयर इज a वेटेज प्रोवाइडेड टू दैट. सो ही आवर क्रेडिट ऑफिसर विल नॉट गो एंड से सर आपकी टी बहुत अच्छी है, इसमें इलायची डाली तो नहीं थी आपने, सर आपका घर बहुत अच्छा है, सर आपने गाड़ी तो बहुत अच्छी कर रखी है. नो, जनरली the credit people go and assess customers worthiness by asking some random question, right, which has no meaning actually. Because they think we have all the God's gift to mankind and we can judge a customer by asking him random question. No, that's not true. So you ask them questions and find parameter, which is operating parameter. So these are the three core pillar in which we are building this business. You focus on select sector and subsector. We over a period of next 5-7 years build deep expertise around that and being able to differentiate, use high degree of data propensity and being able to say yes and no to a customer and how much he can afford basis data. And third, bring that knowledge and IP at the ground level in a template form. And then underpinning that, you have to build a distribution to reach out the big customers or broad base of customers.
This sectoral expertise or that template for the credit officer, that what questions you need to ask. How did you develop this?
So it's we are continuously developing it because, it will take around 4-5 years. The first exercise was done in 2018 actually, wherein we did survey of roughly around 8,000 plus customer, and that was a survey done between us, CRISIL, outsourcing agencies, and our credit officer, wherein we looked at 8,000 plus customer on a rating database, wherein we divided 50% pool, which is a bad customer, 50% very good customer. So we looked at two types of nursing home. One nursing home which has ever defaulted and one nursing home which never defaulted. And we did a survey with both of them and compared the operating parameters, what made one versus other succeed.
This was like a phone survey, like someone would call and ask questions.
Physical survey. 8,000 plus physical survey. And basis that, we defined what is called the operating parameter metrics. And now we continuously refine it basis the portfolio data, right? So we have X portfolio across all our sector and subsector. And wherever we see a little bit of stress, we go back and say what operating parameter we should have looked at, which we should have avoided this, wherein somebody is succeeding that. So it's a continuous journey.
This playbook of sectoral templates, is it something which like you conceptualized it, or is it something which you had seen others do and so you knew that this is how we have to do it? Like how did this arise? Because it sounds pretty unique to me. I've never heard of any company using this approach of and investing so much. Like you must have invested a lot to get 8,000 people surveyed. So
every startup has a unique story to tell, and in fact in some of VC classes, this is say, try getting your idea to be relatable to your own personal journey, because investors like to hear that. Complete false, right? This is all of the startups in India are nothing. Most of them are nothing but a replication of some platform, some other market, and you are just replicating over here, right? So, but obviously people like to hear it that way. No, this has happened because in last between 2005 to 2010, I have seen multiple types of alternative lenders or NBFC succeeding in this idea in different pockets, right? So there are companies in India which are very deeply sector focused, largely in education. So we have Avance, we have Varthana, we have multiple companies who in education financing, India school finance companies who created financing just on education. Then there are companies which are focused on certain geographies and are succeeding because India is not just one country, right? So you have 3 or 4 NBFC lenders who are focused on South in different states and succeeding. There are few in which focus in North. AU, for example, was a focus in Rajasthan as an NBFC and became bank. There are few NBFCs which are focused on certain class of product or type, right? So Electronica for machine tool financing in Pune. We have Kinara, which is small machine financing in South, Neo Growth, which was for POS-based financing. So in last decade or so, I've been seeing that, when you deeply, and also second, in alternative lenders, which is NBFC, if you look at big successes versus not so successful, anyone who specialized became successful. So Mannapuram in gold loan companies, Shriram Transport Finance in second-hand truck finance, Mahindra Finance in agri financing. So the two broad trend came to my mind over a lot of research. One, if you're not a bank, you have to specialize. Second, the people who are doing specialization are doing only in very small segment, and they are not raising large capital to build scale. So they were, for them to get to a 2-3 thousand crore even asset book, is a 10-year journey. So these two things I combined. We have to deeply specialize and we have to focus on sector. And obviously, as I said, your upbringing and all of that, gave me this idea that why don't we replicate similar hypothesis at scale?
Got it. Amazing. Okay. So, who was the investor who funded you, like the 1,000 crore that you raised?
So when 2007, so our capital came from four. First, we did all our capital in between December 17 to August 18. So first it was four PE investors who invested. One is a fund called PAG Asia, which is a $38 billion Asia fund. Second is a fund called ADV Capital, which is a two and a half around $1 billion fund, again focused on Asia. Third is a fund called NewQuest, which are now actually part of TPG, which is a very large secondary PE business in India. And fourth is a fund called Samina Capital, which is based out of Dubai, but is a MENA region private equity fund. So these are conventional PE funds which have been investing in Asian region for a very long period of time. Then when in 2000 mid July or August, I think so, we did a public market raise. We did a QIP. So in PNB MetLife, we actually invested capital in that, and they are a long-term shareholder to us. Multiple other market. And last, we raised around 80 odd crore from few family offices. That was more to give people sense that, it's not just I can raise only capital from professional PE investors, I can raise capital from family offices as well.
Hmm.
So it's a
So,
combination of the three.
you said that the plan was to acquire a listed NBFC. So, at the time of these conversations around fundraise, you had identified that acquisition
No,
target and all. Okay.
no,
So tell me that,
no,
journey. Like when you were when
no.
you
So
got
I
a
think,
commitment,
yeah, no.
like
So
that
I think,
commitment to acquisition. Yeah.
yeah. So that was more transactional actually. So as I said, that my pitches to investors was that this is my idea. I want to acquire, I want to do this business in a listed company. And the first question was why you want to do that. So you have to go back into this and saying, because see, PE investors not necessarily like to be listed from day one, right? They would rather make business to get built and then floated in the market, and so that they can do price discovery. But I was quite convinced that, the quality of governance, transparency, and the longevity of, will happen in this format. So once I get a sense that, or once I, not on a dotted paper, but once I got a sense and comfort that, yes, there are, investors who would back me for this, I started looking for, vehicle. Actually, and that became very challenging because I thought, when you go on, Google up saying listed NBFC, sub 100 crore market cap, there are roughly around 50, 60 names would appear, right? Which are listed but NBFCs but have hardly any business. And then you think if you have capital, then what is the big problem? You just go and make an offer to somebody and you can buy it out, right? So actually, when we did this, we realized that actually there are very far, because most of these small listed NBFCs are being used, or are they exist for some other purpose, either investment vehicle or it is some group's business or something other. But to find a listed vehicle which is really truly clean, have no regulatory problem, nothing was a challenge. I was just lucky. Actually, there was a point of time I was getting very frustrated. We did diligence of almost five actually. And finally, we came across this, NBFC called Chokhani Securities. The owner of that was, an old gentleman, who has kept this only as an investment vehicle for himself, had no uses of it. His son was, willing to do something else. So, finally, he said, yeah, that's fine. I would own little bit of this on a continuing basis, but you guys can buy it out.
Okay. And for this, you would have used like an investment bank to help find and like close the
सर
deal and stuff.
एक्चुअली आपके पास जब पैसे वैसे नहीं होते ना तो कोई इन्वेस्टमेंट बैंक आपके लिए काम नहीं करता, राइट?
Okay. So
खुद ही
this was
करना
all your own legwork, like you would like cold call owners and
पड़ता
say, okay,
है.
okay.
And obviously, look, I spent a long time in financial service industry, so obviously I have a lot of people who are well wisher and friends. So yes, I won't say that they didn't help, but nobody formally did. So I go to. So as I said, that for 2 years I used to stay in this hotel Hilltop for what? This is what the work I used to do. I used to go Bombay Monday morning, stay till Thursday, go around to every investment bank saying, "Kuch to batao, koi to batao." And they say, "Okay, why don't you talk to this guy, meet up with this one?" Then you go and pitch. And they again, you have to. I didn't have money, right? So you have to go and say, as if there are a lot of people backing you. You have a lot of capital, and I want to do it, knowing that these are two things running on side, right? I get a vehicle, then I go to investor, then the investors have to do, I have to do diligence. So it's too much of time. Every every day, I used to think whether this would ever happen or I'm just wasting my time. I don't know, but somehow I felt no, this is definitely possible.
Mhm.
If you like to hear stories of founders, then we have tons of great stories from entrepreneurs who have built billion-dollar businesses. Just search for the Founder Thesis podcast on any audio streaming app like Spotify, Ghana, Apple Podcasts, and subscribe to the show.
So you you first created one entity from which was funded by the PEs, and that entity then purchased the
No.
Chokhani.
No. So everyone came into the Chokhani simultaneously.
Okay. And you got some equity at probably a lower compensation than the investors or
No.
something like
No,
that.
sir.
But you're like the founder, no? I mean, so you would have got some like founder equity, so to say.
No.
Like,
No. So I think that's, I was very clear. For
Mhm.
people to back me, I don't need anything. Whatever is my capital, I would invest and let investors invest with me. I don't
Oh.
need,
So
yeah,
you invested at the same price as all the PEs. Oh,
yeah,
wow.
more or less.
Okay. And once the investors came in and this company got acquired, then you did a QIP. What is a QIP? Like,
Also, which means the QIP is a form of a type of a public capital raise, which means you file a prospectus and you go to the public market, mutual funds and other investors who can fund it. Yeah.
okay. But there's not like the retail, you're not tapping retail here. Like,
No.
okay. Got it. So, like now, around 2019 is when you had the capital. Then probably your challenge was to build distribution muscle, because by 2019 you would have built those templates and you would have built the systems for underwriting and the data mapping and all of that would have got done by then. So, tell me how you built distribution muscle. And first, like, what is your target company size? Like, were you looking at what turnover of companies to give loans to? Like, what was the
So we look at from 1 lakh rupees to 3 crore rupees of loans, right? Typically, these are, customers who have turnover up to, broadly up to 5 crore, but we maximum up to 15 odd crores, right?
like 1 crore onwards? Like 1 crore to 15 lakh?
No, actually 25 lakh rupees onwards.
Okay.
Turnover company.
Okay.
Turnover
So,
businesses.
which means you can't really do physical distribution then, na? Because this would be a very large number, like 25 lakh rupee business. Like how did you
Yeah.
build distribution muscle? Like, that's what I want to
Yeah.
understand. Like,
Yeah, we are building. No, so see, lending is a combination of digital plus physical. So we are very heavily physically focused business. We are now 1,000 plus people, right? In last 12 months, we have added 750 people, and we are adding almost 50 people to 75 people every month. So, having done that, first and foremost, as I was saying, that July we raised capital and ILFS happened in September of 2018, and it was virtually a freeze on lending business in India, especially for non-banks, right? So, which means that
that
most
was
of our
because they didn't have money. Like that's why it was a freeze, right? It was not like there's a RBI mandate or something like that.
no, it was just
Yeah.
the
They didn't have
impact
access.
of
The tap got turned off by the banks, so they could not
yes.
lend.
Yeah, most of them. Yeah. So because it was what we call layman moment for India, right? Because the largest financial institution just fallen like a pack of cards. But anyway, for us, because we had base capital available, we said we will use this time to build. Uh, our distribution, designed to service the need from this 1 lakh to this 3 crores customer set. And we do it in 4 different ways. First we said we will service prime customer. What I mean by prime customer who would not give me initial losses on my balance sheet, right? So it's a customer which is very rate sensitive, very low yield, but highly secured customer. But because we were funded up by equity, we said that's fine.
Hmm.
So,
So
but
these are like low risk customers, like people with
yeah,
good credit history, good credit
yeah,
score. Okay.
yeah, sub 10% interest rate or 11% interest rate, right? See, what is lending business? We borrow at 9, we lend at 14, we earn 5%, and then that 5% has to manage our cost of credit, OPEX, everything, right? Uh, but you can afford to do that if you have large capital base, because you're not, finally, because we are every business is evaluated on the basis of return on equity, return on asset, and higher that is more the valuation, your investors are happy and everyone is happy. So our distribution we designed first. We said we opened 9 location in India, which is the top metro location. We built our platform called Grow Plus, which helped the intermediaries or loan intermediaries, which is called DSS, 900 plus of them to come on our platform and log in the customer need or files and get approval in first 60 minutes through our digital platform. And then during the pandemic, we evolved our distribution in fourfold. We analyzed this, 22 states, almost 7,000 pin codes, 25 peer set lender, data analysis, and basis that identified 5 states, which is Telangana, Karnataka, Tamil Nadu, Rajasthan, and Gujarat. And we are now entering MP as well, wherein we said we'll build our micro enterprise business. So our first channel is what we call the branch-led channel, which consists of prime customer branches, which are now 14 in 8 states, and micro enterprises, which are 79 location in 5 states, and that is growing to 280 plus location. Second, our channel is what we started building is what we call the ecosystem. What does ecosystem mean? Is that we realize that there is $100 billion credit gap within the supply chain ecosystem. So think of you're a dabber, and if you're supplying something to the dabber, you will get financing because people will believe the dabber would pay you on time. But if you are a wholesaler of a dabber and a distributor of a dabber or a retailer of a dabber, to purchase material from dabber, you are dependent upon either dabber to give you a working capital limit, which we sell you on udhar, or you have to borrow from the bank. But borrowing from the bank or NBFC is very difficult. So we specializes on what we call the value chain ecosystem financing. So if you are a retailer of a dabber or a Procter Gamble or any manufacturer, our data tripod decide on an independent basis how much credit you can take. Then we analyze the data of your historical sales propensity between you and the manufacturer, and whether there is any credit participation which from the manufacturer is coming to us. And basis that we automate credit. So that's our second part of distribution, which we call ecosystem supply chain. Second, our ecosystem supply chain is what we call the machinery financing, standard machine financing business. Generally, the belief is that किसी को आप property के against loan दो तो बहुत safe है. But normally ऐसा होता नहीं है because property, if the customer defaults, you have to go acquire that property, sell in market, and all of that is very cumbersome exercise. But there is always a small machine component in any manufacturing, which is called CNC machine. And that machine is actually has a self value. If customer defaults, you can take the machine, refurbish it, and then resell in the market. And why we call it ecosystem? Because we are dependent upon a ecosystem of OEMs, which are the manufacturers. Because they have the sales distribution network, our credit teams would sit there. It's like a car financing. When the MSME customer is coming to buy a machine, we will on tap provide financing of the machine. And for some reason, if the customer fails to repay, our OEM will help us to repossess that machine, refurbish and sell it. So that's the second part. So the way you should think about UGRO is highly sector focused, digital, branch led channel and ecosystem, which is supply chain machine. Third of our channel is what we are saying is a platform called Grow Extreme, which is we are building India's largest co-lending platform. What I mean for general listener to say, our belief is in India that money is in a prerogative of banks, right? Because हर आदमी पैसा तो बैंक में ही जमा करता है ना, because banks are considered to be risk free or failed it will not fail because governments would bail them out. But banks' ability to then use that money to distribute in the market is very difficult. So our Grow Extreme platform actually help the banks to do co-lending with us on the asset which we are originating. But also on our Grow Extreme platform, we have now 30 plus fintech and small NBFC which are integrated through an API with whom we are doing co-lending, right? And our eventual goal for a very large bank to be able to do co-lending with one of my fintech partner which is integrated through us, so we can channelize the capital from a large bank to the end customer either directly through our engine or through our partners engine. And fourth, which we are now launching, is a card solution, which is a GST based credit card, wherein anyone who has GST data can come and log in into our system and get up to 5 lakh rupees of credit limit on a card base. So this is the four set of engine. We are still early days. We have said our mission is to take 1% market share, 20,000 crore of asset book in by 2025, and that's a very steep task. So we are still working on solving for that.
So let me recap. So one is you have the prime business, which is branch led and which is also fed by DSAs, right? Like the
Yeah.
okay. And then you have supply chain financing, in which the retailers and like further downstream from a manufacturer, you are giving essentially like a BNPL service to them. Like they can buy goods and pay later.
Yeah.
Okay.
Yeah.
Okay. Okay. And then you have like the machinery financing, which is again like a BNPL. Like you can buy a CNC machine and pay in installments,
Yeah.
similar to what somebody would do at a Chroma for a fridge.
Yeah.
Okay. Okay. And then Grow Extreme, this I want to understand a bit more. Is this a consumer portal where consumers can
No,
come in, or
no.
it's just a B2B portal where on the
No. So
one
it's
side suppliers of funds and the other side people who want to give loans like fintechs, they are getting connected?
yes.
Okay. Okay.
Yeah.
Okay.
Kind of
So essentially, you are helping fintechs to
get capital.
yeah. So the way say like a payment gateway helps fintechs to not have to talk to banks, but just get a payment gateway. That payment gateway takes care of integrating with all the different banks. So something like this would help a lending focused fintech, that they don't need to go and talk to 15 different banks to co-lend or NBFCs to co-lend. They just collaborate with you, and the
Yeah.
same convenience of a payment gateway you're giving like a lending gateway in a way to fintechs.
Yeah. And today we are providing our own balance sheet to them, but eventually we would like our banks to provide balance sheet support to them.
Okay, this is a pretty powerful play in itself. I mean,
Yeah.
like uh, this is like a
I call it a multiplier impact, right? So not only we are building a lending platform, but we are helping for many and many lending platforms to get power of capital through us.
Mhm. Yeah. I mean, because like some of the most valuable fintechs are companies which power the connections.
Yes.
Like say Stripe in the US is probably the highest valued fintech because it's powering those connections. And so similarly, you're building like a version of Stripe for powering lending connections.
Yeah. So you're right. But only thing is that we are listed, we are profitable. We focus on return metrics. We focus on gross NPL ratios, capital adequacy. Versus a lot of VC funded businesses are only selling future, and we will get to know about the real sustainability of those businesses over a period of 5 to 7 years. That's the orientation difference.
So I want to understand Grow Extreme better. Like, can you help me understand how the product works? Like, for a
So
fintech,
today,
do they need to supply? This is my target audience to whom I'm lending, or like how is that underwriting happening? And because
today
each fintech
we
would
only,
underwrite
yeah,
differently.
yeah. So we only deal with only fintechs or small NBFCs who are in SME folk, small business segment. So we will not touch consumer, will not touch personal loan. So if you are a fintech and regulated, that's most important. You have to have some regulatory. You should be fintech with a small NBFC. And suppose you are lending to customer base of Swiggy or Zomato, right? Or restaurants attached to Swiggy and Zomato. So you are underwriting credit basis some data. We will integrate through an API. we have a defined scorecard, which is a digital scorecard. So once that, that fintech would, through an API, the case would come into our system, the data would be retested on our scorecard, and then we will lend through that fintech to a Swiggy customer, right? We will have a differential rate, so they might be lending at say 22%. We will agree to pay a fees of 6-7% to the fintech for origination, and all of the hard work. But the fintech may provide some form of a credit support, so in case of a loss happening to a customer, some portion of the loss they will absorb first. So that is one side of the leg happening today. Other side of the leg is that today, an IDBI is integrated with the Grow Extreme platform, and a customer being, lend in our prime branch channel, IDBI is co-lending right now with us. And our eventual goal is that an IDBI or a bank should be able to not only lend for a customer which is originated from our prime branch or our micro enterprises branch, but should also be able to co-originate and lend to a fintech which is lending to a Swiggy customer through our API integrated platform.
Okay. So Grow Extreme is essentially uh, going to be connected with every part of the business, like these distribution channels which we just discussed.
Absolutely.
Each of those, the bank should be able to access and decide that, okay, I want to allocate 50 crore of capital for micro enterprise, and
Yeah.
that 50 crore then can
Yeah.
be
Yeah.
distributed.
So we are in a very early stage because, you're trying to so these are, people sit in very different, understanding, for a large public sector bank to be able to understand, a fintech doing a Swiggy customer restaurant. It's not something which will happen over a period. This is not solved. A lot of people like to play, this is all technology related solution. No, that's not true. It is all about behavioral analysis for a large banks to understand and be, agreeable to send, lend to a customer segment which they have never done before. Technology is only an enabler. It is first the acceptance of that. So this would happen over a period of time. That's why when if with that fintech, if I have done business on my balance sheet for a year, and then when I go to a large bank and say, look at this, I have done with this fintech for 1 year. This is the portfolio, this is the track record, this is the loss ratios, and this is how we have done it. That gives a confidence to a large bank saying, अच्छा अगर आपने किया है, तो हम भी कर सकते हैं, right? And then we have to say that, sir, कुछ भी होगा, then we are behind it, by protecting or giving our balance sheet support. So that is the way it would happen.
Okay. And help me understand this GST based credit card, like essentially looking at GST returns, which would tell you how much revenue the business is doing.
Yeah.
You would issue them
Yeah.
a
So,
card.
and and then because we have what we call a margin analysis by sector and subsector. So GST gives you which sector and subsector the customer belongs. You make a presumption of base margin, which on a particular turnover, a small business would definitely be, making. And basis that margin, you set up a credit limit.
Like credit card needs a bank, right, to issue it? You need no. Okay.
No.
What, like an NBFC can also issue a credit card?
No, we cannot do. We have to rely on somebody else. So there are, there is a PPI license holders, and the PPI license holders, we can do a white label card with the PPI license holder. Our NBFCs can't. It's a regulatory, RBI gives different type of licenses. A PPI is a one type of license which allows people to issue card. At the back end, there is a bank as a issuer, because finally there has to be banking. Yeah, so I don't want to bore your audience with the very complex jargon about technology and regulation around that. But theoretically, think of, there is a bank which is issuing a card. There is a, technology provider which is facilitating that, and we have white labeled and we do rest of the work.
Okay. So for the customer,
very similar to what, you see this, all of the, so you have an Amazon credit card, which is not an Amazon credit card, no, that's an technically ICICI card, or you have a airline credit card. So there are many people who issue cards, which they are not a card issuer. At the back end, there is a bank which does that, but you white label for your customer segment.
So the credit card revenue for you would be the interchange, like the MD, the merchant discount rate. You would earn some part from that, like when you issue a card, plus the interest. Like if somebody doesn't pay in that 30-day window or whatever, then there is an interest charge to them. So that would be your earning.
Yes, and also interest if the if their customer is, and also we'll give option of customers to converting into a term loan. See, one of the problem for small businesses that they need money for say only for 15 days, but unfortunately they have to borrow for 1 year because lenders lend it for a fixed term basis, which means that for the rest of the period they are paying interest unnecessarily. This card solution is a solve for that. That if when you need money for 15 days, borrow for 15 days through a card and then you pay it back. But at some point of time, if you want to convert, so suppose you're taking a 5 lakh rupees of limit on a card, but now you think that you would not be, every card gives you this optional of converting into EMI, right? It is very similar to that. You can convert to a term loan which can be paid over a period of 2 years in a EMI basis.
Mm-hmm. And this card can be used for even, like, say, doing a bank transfer, like, say, for example, paying salaries.
Yes, it can. So this card be issued to the business entity and can be used for any business expense purposes.
Yeah, like if I want to pay salary using this card, how would I do that? Like, I mean,
It's a card limit. Now you just, there is a limit and there is a credit loaded to that. You pay for anything what you want.
no, I mean, you need a payment gateway to use a card. No?
That will be
But
all integrated. Yeah, this would
if
be all
you
integrated. So back end of this would be like any card which you have in this market, right?
got it, got it. Okay. Got it. So, what is in the long term, what do you think will be the split between these different channels, like the prime channel, micro enterprise, supply chain financing, ecosystem,
So our
through Extreme,
branch-led
card?
channel would consist of 70% of our asset book of 20. So 2025, 20,000 crores, 70% would still be from branch-led channel. Roughly around, 20 odd percent would be our ecosystem, machinery plus, supply chain. Around 6 to 8% would be our partnership and alliances. It can actually, you should take 60/20, which is 80, and around 15 would be our partnership and alliances, and 5% would be the digital channel, which is the card solution.
Okay. So, what does a branch here do? A branch is not like a bank branch where a customer will walk in, right? A branch is rather a place where a DSA can interact with the
So,
company.
no, so prime branch is wherein our sales, credit, ops, collection sit. So when a DSA locks in a file on our platform, then for the 990 DSAs, there will be a sales force of around 100 people, which goes and extend make DSA understand our product type and help that customer onboarding, is clarification and all of that. Credit would interact with the customer to do, local underwriting, going a meeting with the customer, and collection post disbursement would help in terms of if customer need to be reminded and collected, right? In a micro enterprises, actually, all of our origination is self. So there is a large sales force which goes out and hunt customers. Then the credit underwrites and say yes, and again same collection. So this is the job of it. Yeah,
How do you define a micro enterprise?
sub 25 lakh rupees loan, sub 2 crore turnover.
Okay. And is it profitable to service them with a sales force? Like,
Yeah, over a longer run, yes.
okay.
This is a yield band. No? So your prime customer comes at a yield of sub 11%, where
Okay.
your micro enterprise customer comes at around 18% yield.
What about if someone is searching online? Let's say I search on Google like loan for my business. Will I
Yeah,
eventually end up at U GRO? And what will be that journey for me?
in 6 to 8 months time, you will. Not now.
In what way? Like you'll start a online
Yes. Yeah.
sourcing,
So
like those
yeah.
sources.
So in 6 to 8 months time, I think so. Yeah, if you go to Google, search for this, you see our name, you come on our website, you'll be able to do all that journey. File push, will system would ask your GST and banking, and then you'll get an on-tap credit, and somebody would follow up and give you the credit. It would happen. Right now, we are doing it in private domain for so for certain select set of our segment of the market, we do it. But we are not great. We don't fancy that we have to digitally market it and then customers would come. Our belief is that in SME businesses, you have to have a direct reach to the customer versus, customer which is coming through this digital journeys.
Okay. So, a DSA is that whole DSA ecosystem is like pretty well established in terms of helping businesses to find credits. Like these DSAs
Yeah.
would have relationships with businesses, and they would constantly be calling them up and saying, "Ki, sir, loan chahiye kya?" And whoever says yes. And
And these are DSAs are not what we call grow partners, and these partners of ours are not typical traditional DSAs. This can be referral partners, chartered accountant, tax consultant, who have the base of
okay.
customers who they have been servicing for a very long period of time. See, understand this. We are coming out of an era wherein every small business used to believe that if he can save 30-35% of tax rate, that's his real income, right? Because margins in the business is 10 to 15% and tax saving was 35%. So the real margin in 50%, right? And which means to save the tax, the most reliable partner was a chartered accountant or a tax consultant. And that's why SMEs generally, when it for all their need, when it comes to a financial need, confide with their, chartered accountants or tax consultant. That is getting over a period of time because now SMEs are understanding that, they cannot remain in an informal economy. They will remain informal, and actually expansion of credit to them would help them to grow faster. So a 10% margin of a 1 crore revenue is only 10 lakh rupees. But if the 1 crore turnover company can get a 50 lakh rupees of loan and that can increase the turnover to 3 crore, the income is 30 lakh rupees. Gradually, this people are getting this logic now.
Hmm. Okay. So the prime sales team is essentially trying to onboard chartered accountants, tax consultants, etc., and saying that
And service them. So prime sales is a B2B to C sales force. Micro enterprises is a B2C sales force.
And help me understand, what the asset book number that you're talking about, what does that mean in terms of comparisons? Like you said, you're at 2,500 crore today. How does that compare to other NBFCs
Or fintech.
or fintech? And you want to be 20,000 crore by 2025. How would that compare? Like, because this number by itself may not help someone understand what it means, so.
Yeah. So sorry, I think so. As of today, at 2,500 crore, if you look at the listed universe, we would be, so there are two, so there are 4 or 5 NBFC which are in the range of 4,000 plus crore of asset, and after that there are big ones which are all above 20,000 crore. Or, it goes from 20,000 crore to see the 1,50,000 plus crore. So the top
This
end
would,
of that,
like, say, a Bajaj would be right.
Bajaj Finance, then Chola, Sundaram, Shriram Transport Finance, many of them like that. So I think so next year we would graduate to the league wherein we will be the behind the top ones. So because the top ones are all 20,000, 25,000 plus crores, and we'll be just below that in the bracket of 5,000 to 7,000 crore of bracket, right?
Who are the peers in this bracket, 5 to 7,000 bracket? Like,
none actually, because all of them are bigger. So you have currently, I don't want to name them, but there are 2-3 which are in the range of 3,000 to 4,000 crore, right? So we are with there, right? But more, remember this, that all those 3,000 to 4,000 crore have an existence of almost 15 years. We have an existence of only 2.5, 3 years, right? So next year we'll graduate from there. And into 2025, if we hit 20,000 crore or 17, 18,000 crore, only dedicated SME financing will be the largest in the country.
And are there any fintechs who are doing even 2,000 crore plus asset book? Like,
most of them are partners to us on our Grow Extreme platforms. Yeah, we have crossed most of them, but some of them would grow. Actually, it would be not fair on me to give name by name. But see, there are a lot of people who are promising. There are a lot of people who are raising a lot of capital, much an expensive valuation than what where we trade today. Because see, our PL set is public market. Different investors said VCs look at very differently. Yeah, so this is a massive, large market. I think so. There should be a play for at least 100 plus U GRO equivalent players, right? So I don't think so that is ever going to be a challenge. This is not a game of competition. This is a game of how many of them can exist and do it. This question.
In fintechs, I guess Khata Book would be looking at this space which you are, no, like SME or micro enterprise lending. I don't think there's any other big name that I can think of.
Anyway, so I look, as I said, I don't want to comment. See, there are two sets of players. Uh, there are a lot of players who have some form and base customer engine, right? And they are not profitable, and they want to now add credit to become profitable. Yeah, it can be a payment platform, it can be a marketplace, it can be an accounting, software provider. A lot of people, who are promising that I have a million customer, can I give 50 lakh rupees per customer, and that's why my book should be this much. That's a promise, right? And basis that, I need to raise $500 million today, right? But our approach is that, look, a customer acquisition on a non-credit parameter for solving non-credit solutioning and adding credit to that is a two completely different businesses. I have not seen a non-lending platform to succeed in a non-lending environment, right? So I think so that jury is out. People who have base of customers, sometimes I also wonder, should I go and acquire somebody who has an existing customer base of, say, million SME customer so that I can funnel credit to them? But then, today, through our engines, the number of customer who are coming to us, we are not being able to service all of it, right? Because end of the day, I need banks and financial institutions to lend to me to being able to lend to others, right? It's just not a game of as customer acquisition. It is a game of giving, being resilient, being able to control credit quality, and being able to borrow on balance sheet to lend to others, right?
Okay, okay. So it's not a demand problem.
No,
You need
absolutely
to
not.
build supply, and in order to build supply, you need to have a reputation of good credit
Trust,
control, good
trust. Yeah.
collections.
Yes.
Okay,
Yes.
okay. So, what is your collection strategy like?
So look, it's a physical plus digital again. We do lot of massive data analytics around our customer. Again, whole this tripod of data. So the bureau, the banking, we give an early advanced signal of customer behaviors, right? And basis that, system triggers different kind of collection strategy. Almost 95-8% of our collection is digital, right? So we hit bank account and collect money from there. We are not a cash collection,
Hmm, hmm,
company,
hmm, hmm.
but there,
Like customer gives some sort of mandate which allows you
yeah,
to
yeah, just pull
direct
money from his
direct
bank
debit.
account, right?
Okay. Hmm.
Yeah, but if our EWS system is saying that this customer has bounced his check to three of his lender, so it's an early warning signal, which means that it would trigger to our collection team to go and have a conversation and ensure that we get prioritized, right? Or what other support we can provide. So before we become defaulter, so that's our collection strategy. Use data analytics to provide early warning signal, and then trigger collection strategy basis that
Hmm. Okay, okay. What is the EWS system?
early warning signal.
Early warning signal. Okay, okay, okay. Got it. And what is the health of your portfolio? Like, what is the NPA percentage?
Yeah, so I think so. One good thing about pandemic to us is that in 2000, I remember 2019 when I used to make this presentation to people about sectoral approach, data analytics, data tripod, India is changing collateral to cash flow. जनरल जवाब था कि पहले बना लो बिजनेस, 2-3 साल बाद जब पोर्टफोलियो दे हो जाएगा तब बात करना. Okay? No, I'm not, nobody said this in France. This was general. It was बहुत अच्छा, ये ऐसा हमने ऐसा स्टोरी और ऐसे प्रेजेंटेशन हमने बहुत बार देखे हैं. जब हो जाएगा तब बात करेंगे, राइट? बट फिर उसके बाद आ गया पैंडेमिक. अब ये पैंडेमिक में टू राउंड ऑफ पैंडेमिक, and then when now we say, look, it worked for us for an event which was never ever imagined, right? And look, relatively our portfolio has held on. So today we are at a almost 2% of gross NPA. Uh, Net NPA would be 1.2%, collection efficiency 97-98%. Restructuring very low. All of that parameters, we on a relative term we do much better than any of our peer set. That gives confidence to our lenders that these guys, for a completely unplanned event, could still hold on to their portfolio quality. So that has been good for us. Pandemic has been good for us only from that context. Not that, we were very confident from day one. Without pandemic, we would have been at a 1% gross NPA, but post pandemic, we are at 2%. No.
What was the pandemic impact for you, both positive and negative? Like, uh, did it help
So,
you get like disburse more, or like?
no, I don't think so. It's not that. No. So I think the pandemic positive impact was that now we are able to prove our model to the markets. Second, we
Like you
could,
got stress tested, like the pandemic
we
helped
got, yeah,
acted
otherwise
as
it would have taken 5 years for people to stress test and the seasonality of portfolio. We got a stress tested early. That has gave confidence to our lenders. Second is that we had a pause of almost 7 months. We used that pause to build in our infrastructure because we still had capital capacity. So we grown our distribution infrastructure, we grown our digital infrastructure, technology, all the processes and all of that. Otherwise, sometimes when you start, you don't never stop. You just start then struggling with the operating processes. So that was second big impact. Yeah, and third, I think so digitization, because there is a general resistance in lending industry that a lot of people will say कि digitization is not possible. So, for example, if I tell you that if you can take a loan and actually you don't have to walk out of your home and sign something on a pen and paper, and but you can get a loan. Pre-pandemic, it was considered to be impossible. No, the regulation, the law, the technology was all there, but by force now we have adopted it, right? So we are giving in certain segment of the market, we are giving loan without actually no wet signature at all. You know, this general, I used to go and tell our credit officer कि ये सबसे जाके मिलना क्यों है भाई, क्या पूछ लेते हो आप, वीडियो कॉल भी तो कर सकते हो ना, right? Like, or this whole offsite, thing. Oh, we'll go to Goa, we'll go to, and meet, in, these big halls, 100 people coming together and doing offsite, क्योंकि bonding हो जाती है. Actually, not true, ऐसी ही हो जाती है bonding, right? अभी तो सारे 500 people on a team call or Zoom call also are bonding now because, there's no other choice. So today, 50% of our PD, which is personal discussion, don't happen in physical way, right? It happen digitally. There are outsource agency who go and record videos of the premises and everything. So I think that the pandemics, force a multiplier impact on digitization is very high now.
Mhm. Got it. Okay. Okay. You said you have an NPA of 2%. Again, can you help us understand what that number means in context of like how much does a bank have as an NPA, or like what does this number mean? Is it above industry standard, below industry standard? What, just.
Yeah, and look at it. So generally, it varies, but I think the banks, public sector banks, would have it in the range of 12 to 18%.
Wow. Okay.
Yeah, so that's the highest point, and then variety degree of, so this should be lowest in the industry. I must say that.
Amazing. Okay. 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 So, and what is your market cap right now?
Roughly around 1,500 odd crores.
And how has that like what has been the trend there? Like at what pace has it grown, or?
No, it has not grown. I think so because one of the challenge is that public market investors, the mutual fund, I think so they don't give us. So Abhi, there are few fintechs who have never made profit in their life. Uh, and one of them actually says, "Please don't ask me when I make profit for next 5 years." Because few VCs have funded them, and those VCs have taken their price artificially. When they went to the market, bought them at I don't know what metrics, I don't really understand. And since they have floated, then every day their price keep coming down, and finally the public market investors are taking loss on that. But when it comes to us, obviously people compare us to an NBFC or which is already in existence for 25 years, right? And then they think this is subscale. I thought that public market is a very smart place, and they would play the growth which we will demonstrate over a period of time, right? Because why public market has to go and buy so expensive for things which we are not proven? We are proving every day, right? So you buy us so cheap and be part of my growth journey, right? Somehow that has not happened, but that's fine. It's okay. I'm patient. I think so. But we've done relatively last 2 quarters. I've seen much more improvement. We used to trade below. So the parameter, and just so that you ask this question. So the market mean is what is called a price to book trading multiple, and most of our peer set would trade at around 3.5 time price to book, which is my net worth divided by number of share, which is your book value, and then there is what is the multiple market provides you. We are trading at 1.5 times still.
What are the challenges of running a publicly listed company? That things that somebody who's never run something that they should be aware of, like what could be the pitfalls and what could be the things to avoid, and what have been your own learnings that would help other people running a publicly listed company?
Yeah, look, obviously, see, I have run businesses of a scale, so it has not been a challenge for that for me personally. But and like,
Delhi Gateway is listed, like
yeah, it was, it was, and also I've seen businesses of size and all of that. So for me, it is not a personal challenge per se, but yeah, it's an overload of regulation, compliance. Another, not many other thing. What you can do, what you cannot do, so on and so forth. So my suggestion is that choose at a point, if you are a financial services and a balance sheet led business, being listed helps because people get faith and trust in the transparency and public disclosure which you make. But if you're not a financial services business, choose it when you really need it, right?
mm, mm,
Otherwise
mm,
not.
mm. Okay. So, what are your personal things you want to do within the organization as a CEO to hit that 20,000 loan book target? Like, what will be your focus areas? Will it be invest more in technology, or will it be in recruitment and talent acquisition, or what will be those things that you will personally have a lot of focus on?
So our roadmap and how we'll get there, what components would contribute is very, very crystal clear, right? So first, we have to continuously focus on our data analytics and technology, and we have to keep investing for that, right? Because this is an ever evolving. Second, we have to grow our liability side, which means we, more and more large lenders have to come to us to funnel our growth. And third, we have to keep working and making our distribution profitable, right? So last year we have invested very heavily in our micro enterprises infrastructure. So today we have 79 locations contributing to 20 odd crore. So our focus is that get to a point of break even and start contributing. But our base, so this combination of continuous focus on data analytics and technology, continuous focus on building a profile and trust among lending institutions, and third, it's keep focusing on making our distribution more profitable and being able to service the customer would take us there, naturally.
Hmm. So, what does investing in data and technology give you? Like, what number would it move? Like, if it's a lever that you're moving, is it is it the NPA rate which gets moved by investing in data analytics, or what is it? Or do you get more profitable? Like, you're able to do better pricing of loans, or
All together, one, being able to filter between good and bad customer. Second is that being able to price your risk is all a function of data analytics. Saying yes and no to customer in 30 minutes time or at 10 minutes time versus taking 7 days, right? And second, whether you should lend at 13% or 17%, and what is the projected loss ratio is function of data analytics. Third is protecting your balance sheet, which is what I call about EWS system. And eventually this lead to what we call in better, income OPEX ratios, because our OPEX to our income ratio would be superior to conventional lenders because we are not wasting too much of time.
yeah, help me understand what is the income OPEX ratio?
For 100, what is your expense to your, so to earn 100 rupees, if your expense is 50 rupees or 70 rupees, right? So if my comparative traditional lender have a 70 rupees of ratio, I would have 50 rupees over a period of time.
If you like the Founder Thesis podcast, then do check out our other shows on subjects like marketing, technology, career advice, books, and drama. Visit thepodium.in, that is thepodium.in, for a complete list of all our shows.
Before we end the episode, I want to share a bit about my journey as a podcaster. I started podcasting in 2020, and in the last 2 years, I've had the opportunity to interview more than 250 founders who are shaping India's future across sectors. If you also want to speak to the best minds in your field and build an enviable network, then you must consider becoming a podcaster. And the first step to becoming a podcaster starts with Zencaster, which takes care of all the nuts and bolts of podcasting, from remote recording to editing to distribution and finally monetization. If you are planning to check out the platform, then please show your support for the Founder Thesis podcast by using this link, zen.ai/founder thesis. That's zen.ai/founder thesis.